But
where are all the people that want to learn?
it's all good. It's going to be recorded. It doesn't
Back to
matter.
school week. Yeah, people have appointments, that kind of thing.
So welcome everybody to another Ask the Loan Officer, even though there's nobody in the call right now, but that's fine.
Well, we have Mark here though.
That's right.
Mark,
We have
say hello.
Hello, I'm live and in person.
That's right.
Yep. So it's another week and we have, we are always here for you guys. It doesn't even matter. But this is of course going to be recorded. So it's already being recorded. So this week, with all of the hullabaloo about rates that has been all over the news, we figured if there wasn't any questions, we would go over the ins and outs and kind of the deep dive into rates and what actually
We should see if Mark has any questions.
be like, well, yes,
Well,
but
tell us about rates.
That wasn't
But-
scripted.
What are they?
We're
How
gonna-
long's it for you? It depends.
that's right.
Oh, yes.
But you did have a good question.
Well, talk about rates first.
Okay, we can talk about rates. But basically, it's just a deep dive on rates. And so, Alan, take it away.
Well, before we get to that, this is I'm gonna look at the camera instead of Mark over here. But it's very, I've been beating this drum for a long time. It's very important when you're working with a lender that you don't know and you get a pre-approval letter. And I can't tell you how many times I've had somebody say, oh, they're pre-approved, they're good to go, we're good to go, everything's good. And I say, awesome, did you get an estimate? And the answer a lot of times is no. Now, there are some lenders that won't give estimates. They won't even give the precursor to the LE, the loan estimate.
Right.
They won't give a GFE. They won't give what we give. We have a thing called an ALKI. There are actually some lenders that will give a loan estimate on a TBD property, but you got to get something, because the point is you don't know that you don't know whether, well, one, you don't really know if they're pre-approved or not by having a letter, but you should want to know as the realtor, not realtor, what program, what rate, what, and if you think it's good or you don't know, or you have questions, you can always run it by us. And I wish Heidi was on the call. She said she was going to be on the call. She'll tell you, she once shared one with me from Navy Federal. And my answer was, you know what, this is a good rate. This is good, keep going. And it gave her the confidence. And then as an agent, she was able to say, hey, look, I had my guy look at it. And he said, this is awesome. Conversely, I've had the opposite happen.
Right.
Where somebody was being quoted the same rate as us, but there were discount points attached.
Yeah.
Which you've got to compare apples to apples.
Yeah. I mean, I even lost a deal, a month or two ago where, the other lender wasn't telling the truth and quoted this exact same rate, but mine was a 0-point quote and hers was a 3-point quote.
Yeah. Wow. So yeah, it's important to compare apples to apples. And also on that note, we're talking, Kara just walked in. We're talking about rates, and when you get a pre-approval letter from a lender that you don't know, it's always important to tie that to an estimate. So you can see what the program is, what the rate is, the fees, the points, heck, what if they don't even have enough money for all that? So the pre-approval letter and some form of an estimate, and not an email that just says, oh, today's rate is this.
Yeah. That's
even a deeper dive into what rates and how they, the terms and how we quote and all that good stuff.
Yeah.
You had a question, Kara?
No, I just had heard, that instance of where someone was getting a gift letter and then the gift letter didn't come through.
Right.
And so to make sure that you're verifying that those funds are there, go ahead and get the gift letter.
Right. Right.
Beforehand, instead of waiting to the end to say, oh, by the way, we need.
Right. So, and that brings up a good point as to why everybody loves Movement Mortgage is we underwrite up front. We don't underwrite every loan up front, but every ratified contract loan, that's step one. Most companies and every company that I've ever worked for 31 years, it's processing, underwriting, closing. We just put the underwriting here and then process. Nobody gets turned down in processing. Get turned down in underwriting, or things come up in underwriting.
Right.
So better to resolve them up front. And as you all know, our goal is 6 to 8 business hours. It gets turned in, at 4 o'clock on a Friday. We're not going to have an answer till Monday.
Right.
But that's the key, is to get all that stuff up front.
Makes so
So
much sense. It helps your seller too. you're the listing agent and you require, you want that up front, man, they don't have that property off the market very long because they're gonna know.
Yeah, they're
They
gonna
can
know.
Get it back on the market right
Yeah.
away.
Right. Right.
Makes sense.
The other thing about rates is, some people shop. They do.
Yep.
We like to educate people on how to shop, because if you don't know how to shop, you're not going to shop the right way.
Right.
So you shop the lock, not so much when you're ratified. I had somebody last week, she was ratified, and she was shopping the loan estimate. I'm like, well, we're past that part. Now you shop the lock, because any lender can say anything on a loan estimate. When it says you're floating, if you say you're, if I say I'm at 5%, somebody else will say they're lower.
Yeah.
So you call somebody else, they'll say they're lower. Call somebody else, they'll say they're lower. And they may be, and they may not be. But it's important to know how to shop, and that's what we're good at. We tell people how to shop. One of the biggest things in shopping is the rate lock term.
Mhm.
You're locked in for a term. So when you call somebody and say, hey, what's your rate? I know you all know the funny answer is always, it depends, but it really does. I mean, if you call someone, what's your rate? Well, I'll quote my lowest rate on a 15-day lock on a conventional with 20% down and a 740 credit score, but that's not the same as somebody that doesn't have all that. So the program is important, but also the lock term, 15-day, 30-day, all the way up to a 90-day. The shorter the lock term, the lower the rate. So
Right.
if you're not comparing apples to apples, you're not getting the right quote. So I had somebody once say to me, well, the rate's this, it's better than yours. I'm like, when does the lock expire? It's good forever. No, it's not. And you shouldn't know that, but the lender should tell you.
Right.
That lender was keeping that person in the dark. Like it was only good for, I think, 30 days, but she wasn't closing for 45. So what good is it? It doesn't mean anything.
Yeah.
So anyway, and the important part of all that is that rates have the ability to change really every second, minute, hour of the day. It could stay the same the whole day if the market's not real volatile, or it could change. So the other part of rate shopping is, if you're going to get a rate quote from more than one lender, you really need to do it in the same couple of minute window. Now,
Mhm.
can it be the same day? Well, sure. If neither one of or none of the three changed in that time period, fine. But if you get a rate quote from one lender on a Monday and wait till the following Wednesday to get a rate quote from somebody else and say, wow, that one was lower. Well, and that happened to me recently. So somebody quoted me something. I'm like, well, you're basing it on the past. I mean, I'm lower now too.
Yeah.
Everybody
Check
is.
back.
Check back.
Right.
Yeah.
Yeah.
So, we, in our consultations, we explain all this to people, but what we need is agents to echo what we're saying, because, takes more than one time to hear these complicated things for people to really understand how it
That's
really
one of the
works.
things I appreciate, because you do share what you share with the borrower.
Right.
We're getting to see that, so it's easy for us
Mhm.
to echo that.
To echo it and chime in and explain how it works. So something else that's a little weird, and we want to, I was going to pull that up. This is how we see rates. And this is another reason why we can't just off the cuff. This isn't like heck, whenever it was, I don't know, the 90s or the early 2000s or whenever, so long ago, where rates were just the rates. I mean, I can't remember what year it came out, but at some point consumers complained
Right.
about, hey, I'm putting down 20, 30, 40%, and I have an 800 credit score. Why is the rate the same for the other person who's putting down no money and has a 620 credit score? So consumers were heard, and they came up with risk-based pricing. So that's why it's a lot more complicated now. Just on a conventional loan, the credit score buckets go in 39-point increments, or 39-point increments, 620 to, or 620, 630, 19-point increments. Sorry, 620 to 639 is the lowest bucket, and that's the highest rate. So there is a, 620 to 639, all the same rate. If you just have one more point and you go to 640, the rate's going to be better. And then 660, and then 680, and then 700. So I know a lot of agents get frustrated when we say it depends, but it really does depend. Like if you tell me your credit score is well, let's just say you say 720, but it's really 679. Well, that's a big difference in the rate. That's why we can't, it's the same thing as if I said to you, what's the cost to buy a house? Depends on a lot of things. So you guys can't actually see this.
Sure, he can turn his
Yeah.
laptop around.
So what we have up on the screen is an example of what we see. So since we're being recorded, I don't want to get too deep into this, but let's just assume, but the assumption is incorrect. But what any lender, and all lenders have the same rate sheet that comes out. It's either printed or online or both. What we would like, and this actually speaks to, I'm gonna put my glasses on for this. Maybe not. What any lender would like is to not have to dig into subsidy to honor a rate. And let me back up and say, it's not really the rate that changes daily, it's the discount points attached to the rate. And that's what that, I guess the third column is. You can see the one that's highlighted. Can you guys see that?
Yeah.
So 6%, and keep in mind, this is just one scenario. Doesn't mean all rates are 6%. So anybody
Right.
watching this after, don't freak out and say so-and-so is lower. This is just one example.
Yeah,
of-
this
of-
is just a dummy loan.
Yeah.
We just put some numbers in there to get to
to
this
get to
section.
put-
Yep.
this matrix would be different for every single loan.
Yep.
That we do. All right, so in a perfect world, we would love to bring in what we call par, or quote the rate where we're not going to have to give up any subsidy. But this is, everything's negotiable.
Yep.
So what's important to see on this is that the coupons don't always make sense. So if somebody was calling me and my company would be happy if I could quote par, which I never do, I always go a little below. I would quote 5.99 because par is 100. That means anything over 100, you're giving it back to the borrower.
Mhm.
Not like the old days, anything over 100 back in the old days, I got to make half of that and the company made half and the borrower paid it,
Or in this case, like we said, the coupons are kind of whack sometimes. You see how par is 100 at 5.99. Well, actually, the mortgage side would have to pay, a little bit of subsidy, because at 6, it goes down to 99.875. And then it goes back up above 100 at 6.125. So this is why the coupons can be a little whack sometimes, they literally make no sense.
Yeah.
So, you look way up at 6 5/8, it's 100.375, which would mean that we have to pay back in a lender credit 3/8 of a point, because it's 3/8 above par,
Right.
100. But then if you go all the way down to 6 1/8, I mean, that's pretty far from 6 5/8. It's still above par. And if the credit's only an eighth less, it's 100.25.
Yeah.
And then if you do want to just quote par, you're all the way down to 5.99, exactly 100. We don't need to give a lender credit. They don't want a lender credit, but that's where we would start is there. And then as we go down, we could possibly lock this loan depending on factors that I'm not going to say and have be recorded. 5.75 or 5.875 and not charge the borrower anything. Again, I'm not going to explain how that works right now, because there's a lot that goes into that.
Mhm.
But that's a far cry from, say, 6.5, which is at par plus an 8. So now the biggest thing to note here is this can potentially change every day.
Right.
So I could say, we could do 5.75 with no points today, and it's at 99, and I can get that approved, and but tomorrow might be completely different.
Mhm.
So this potentially changes every day. There's only 3 things that can happen, and this sounds a little silly, but it can either go up, go down, or stay the same.
Yep.
So it can play around and travel up and down. So any questions about that?
No, but I'm
The-
glad you really.
Yeah,
Yeah.
and that's what
Exactly.
you want to work with somebody that you can trust. And of course, this is actually, this is a snippet, but again, the lock term, how long this lock is good for is crucial
Oh,
as
it's a
well.
30-day.
So this is a 30-day. We like to try to build in some wiggle room because you never know. I'll give, you guys, full of stories because, 31 years, you come up with a lot of stories. I think those resonate better than just, reading stuff, but we built in 7 days. So because it's just the way it lined up, we did a 45-day lock and we only needed like a 38 or whatever.
Yep.
But we got towards the end and the seller wasn't ready. The seller's like, well, I need to pack more and wasn't ready. So you have to think of these things could happen. You could have that extreme example. I had another one where a we went to closing and then everything was done. The bar went to the house and the person was still in there and didn't want to leave and was a little unhinged and said, I'm not leaving. What are you doing? What are you doing in my house? And the poor 22, 23-year-old guy buying his first condo. Why you laughing, Mark?
It just, it's
Oh, yeah.
on me how somebody could actually think.
Yeah. She's like, well, I'm just not ready. But, and I felt bad for her. She was, you know, she was up there in age and I think just not all there. She's like, well, I know I just went to settlement, but I need some more time, you know? And it
And
was,
that's what the agent needs.
Yeah. and then it got a little,
Say,
you know.
look, you're on track to do this.
Yeah, I've had a scenario where we went to closing and the seller wasn't there, but all the seller's stuff was still there. And the buyer had a truck getting ready to unload. So, and the seller was like 4 hours away, driving 6 hours away or something. So,
We're scrambling
so-
to get all of their belongings out of the house.
the other, before I forget, because it's in my head, you know, the other really big thing is that we are really good about communicating this to settlement companies.
Mhm.
And here is the reason why. Let's say that the way things are lined up, the lock is expiring on Friday and we're selling on Friday. We wanted to close on Monday, but there was issues on the seller side and we're not closing till Friday. Well, if we don't communicate with the settlement company, and I don't know any lenders that do, what if something happens at settlement? It's, you know, they don't start till 4 and it doesn't end till 7, the business day's over and they say, you know what, this isn't all right. Let's just redo it on Monday. If they don't know, because I haven't communicated, which we do, that the lock expires on whatever day, they might make a decision and mess up because you can't go back in time. Once the lock expires, the day's done. So, you know, it's all about communication with everybody in the process.
Yep.
So,
So I know it depends. What's kind of your average rate that you are quoting right now?
I go, what I do
And
is
know
I
it depends.
Yeah, I go on Google and I just search the national average. I tell them, be like, look, you can look it up on Google. It's the national average, but it depends on many
Oh, yeah.
factors. You know, what your rate is could be completely different to what the national average is.
now, I don't like people to go to Google, sorry.
I know,
But-
I know.
Yeah, so rates for mortgage companies are, they're based on actual areas. So the rate in Warrenton is not the same as it is in Charlotte
Yep.
Right.
or San Francisco
Or San
or
Francisco.
Tidewater or Hampton Roads. So another reason why I love the systems we have now, unlike the systems we had in the 90s and the early 2000s, where it accounts for everything. It reads it all and tells us, boom, what it is.
Yep.
It reads it all. It's a condo. You know, it's a cash out refi condo. It's it reads everything and it's all right there.
So are you seeing them come down as far as what you're quoting? Or I know it depends, but on average, are you saying, hey, your rates are coming down for you right now, or are you seeing them still going up?
Well, pull
And then I have
up
another
the Japanese candles. So this chart. Can you flip around so they can see? So they can see. So this is how we track it. This is a service we pay for. This is the 30-year. You can probably, you could look at the 10-year, the 30-year, but what's important to note here is this is the tracking of the rates for the 30-year 4.5% coupon. Red down is bad. That means rates are going up. So you can kind of see, actually I can look at mine, so you can't see it far away. You can see from August 2nd, which is kind of the biggest red candle. Actually put the cursor, yeah. From that time on, we had a little up, down, up, down, up, down, but pretty much since August 16th, it's done nothing but go down, which means rates have gone up. So we watched this, and this is based on something that, you all might want to Google this on your free time if you have a hard time sleeping at night and you want to fall asleep in like 10 minutes. This is based on something called the Elliott wave theory. And it's about a buyer, buy and sell patterns. And a lot of this can be predicted. Now, 100% no, but it's a good indicator. And as you ride these waves, like you can see, I know you can't see the dates on here, but can you pull that back up? If you go on July 21st, kind of the middle big green candle, all the way up until August 2nd, that was the Japanese candlesticks were trending up, which means rates were going down.
Right.
And we get alerts. So that little upside down triangle that's orange, is an alert to lock because something's happening. What's important to note about this, and any lender that doesn't use this is crazy, or some system like it, these alerts have always come before my company can react, because, market's tanking and the company has got to change all the rates. It takes a lot to change all the rates for every program, for every scenario. So we try to ride these waves. So maybe to sort of answer a question, as we are watching this, we try to watch when it starts to go back down, up and down, up and down, up and down. A lot of this has to do too with, are you not closing for 60, 75, 90 days?
Right.
You can look at it. You can go back and look at any sliver of time for 60, 75, or 90 and kind of track to see how it's come back, because it goes up and down.
So
So
overall rates are still continuing to climb
slightly, but we had a
period-
time
a
from the
period.
14th to the 3rd where they went down. And important to note, another important thing to note here is the last time the Feds raised the federal funds rate, which is the rate that banks charge each other to borrow and lend money to each
Overnight.
other overnight, the 30-year fix went down.
Yep.
So,
So do you see any kind of issues with this latest thing with Biden? Well, I should say the current administration.
It's fine.
Since we're being recorded, as far as forgiving a student loan debt.
Mark, that's not going to happen.
Our,
Sorry.
yeah,
Could we say positive?
inflation is gonna increase because people are not paying their loans, they're gonna go out and they're gonna buy stuff. Okay, so inflation is gonna increase. Our debt is going. to
Let's just move to
increase.
Canada right now. Let's just go.
I'm telling you, I'm searching.
No, because I
No,
have
just
hopes
kidding.
to be a.
But everything is going to increase. Is that gonna have any bearing
It will.
on that?
It will.
Yeah.
And how much do you?
Don't know. Yeah, when nobody
Can't
has
tell
that
the
crystal
future,
ball.
yeah.
But I mean, it will. Everything, what's important to note, these are the bonds, the 30-year bond and
30-year.
the 10-year treasury, but a lot of things affect these. There's, the war in Ukraine, this, that, the other, there's so many.
Yeah.
So this is what happens daily. You can see this is like what I've always said this for years. This is like a mountain range, so many things go into affecting what happens.
Yeah, and then, even still, the number at the top of this this website, it gets updated constantly. So throughout the day, like currently it's a 17, it could, in the next 5 minutes, bounce up to, down 19 points, or it could go positive to plus 23 points. It changes throughout the day constantly.
And
So-
all
That's one of the
lenders,
questions I was gonna ask is, when you look at this at any moment in time, let's say at 3 o'clock, you look at it again, is it different?
it's different
It's
it
not
gets
a daily
potentially
thing,
different
it's a-
every
it's a
second.
moment.
Yep,
It's
it's a moment by
just-
moment.
Yeah. Right. Yesterday, I think we were at one point, we were down, which is bad on the 30-year. We were down, which means rates are up 20 basis points. And then, at some point we were positive 4. So it can
Oh, wow.
fluctuate a lot in a day. There was a day not too long ago where, oh my gosh, we were down over 100 basis points. And it
Yeah.
just, which means rates go up.
Yeah.
So, the nuts and bolts of it all is that a good lender is watching the market, not just an application. Anybody can take an application. You just
And
you
there are
drive them
some
to go
companies
online.
that do that. Correct?
Do
There's
what?
some mortgage providers, or they'll take an application, but they're not really doing what you guys are doing. You guys
Yeah,
are.
there's the
yeah.
whole gamut. There's a
you get
lot
your
of
hands
people.
dirty in
Looking
that
at the
loan,
basis.
and
Right.
like,
Yeah.
okay,
They're-
let me watch this. Hey,
Right.
this rate is
They're,
better.
they're in defense of our competition. There are plenty of lenders that do what we do. I would never think that we're not that pompous to think that there aren't lenders that do this. But it runs the gamut. There are lenders, and I won't mention the credit union, but where really I narrowed it
Is it
down,
down
but I'm
the
not
road?
going to say, but yes,
Yeah.
they just take applications. And some do it that way. And then, I've got 31 years experience and a degree in finance, and the track that I chose in finance is real estate finance. So,
Right.
I learned a lot. I learned a lot more a year out of college than I
Yeah.
did, but still, I have that background. So, yeah, that's another good point is to find out if you ever get a pre-approval letter, to ask for an estimate to go along with it, but you want to ask the experience of the person.
Yeah.
Did they get this business? And I don't want to besmirch this profession, but do they sell cars for 10 years? And then they switch this because they're good in sales? Well, that's, just because you're good in one sales doesn't mean you're good in something else. This is a very, you're not buying a loaf of bread. You're not buying a pair of shoes here. You're buying a house. It's a big deal. There's lots of guidelines. There's lots of things to go through. It's not the same as, you're buying a car. The car's the car. And, you get trained how to do that, but it's a lot different. And
Yep.
same thing with being a real estate agent. It's not, there's a lot to it. You get a license and then you learn a lot about how to talk to people and communicate and inform. Our job's to educate people. And application takers have a hard time doing that because they're just taking their front end people take application. And I actually had a loan once, or not a loan, I couldn't do the loan. An employee of a credit union called me 2 or 3 or 4 days before settlement, saying that the loan was blowing up at the credit union that she worked at when they told her it was just a formality, you're good to go. Long story short, I said, look, the only thing you can do, I took a look at it. I told her 15 minutes, not doable, can't do it. I would have told you 45 days ago. And she said, thanks for being so quick. They weren't. And I'm like, your employer. I said, the only thing you could do is maybe go to one of the vice presidents of the lending department and plead your case. And basically his response to her was, nothing matters until you get to underwriting. She's like, well, that's not what I was told. It's really as an originator, we have to wear a lot of different hats. We have to be a little originator, processor, underwriter, closer,
Yeah.
little CPA, all that stuff to be able to coach through the whole process.
Well, you gotta care enough about the person.
You do.
that
Yeah.
is-
It
is getting the
it
loan.
angers me when people say, oh, it's not my fault. It got turned down in underwriting. Well, if you
Yeah.
did a better job originating and asking probing questions to get answers, because borrowers don't know what to divulge.
Yeah.
They might not give you all the information, but if you ask probing questions, you get the answers. For instance, ask somebody, we asked everybody, can you get a gift if it's needed from a family member? Because they don't know that that's you. I've had people say to me before I ask that question, oh, that's, you can't do that. I'm like, oh, really? Oh, okay. Well, yes, you can. I had somebody once that didn't think that they could use the proceeds from their sale as the down payment and closing costs for the purchase because it was closing the same day. She's like, no, it doesn't work that way. I'm like, yes, it does. You can sell your house at 9 and buy another house at 10 and the money just kind of transferred. She's like, no, it doesn't work that way. Okay, it does.
Yeah.
She didn't believe me, so she didn't do it. She wanted to refinance
Oh, wow.
after. I'm like, I'm this is how it works. The money just goes from one company to another or stays with the same company or whatever.
Yep.
Yeah, but yeah. Gosh, there was something else I was gonna say about rates and I can't remember. The rates are big, you all know, rates are a big thing for me. Apples, you got to compare apples to apples. And again, I think the more agents. and
It's not
loan
just the
officers communicate-
rates, but what you're saying is it's the person that you're, it's the company.
Yeah.
It's their processes,
Yep.
it's when do they do underwriting, it's the background of the person,
Yeah.
the loan officer. So
Mhm.
you're saying there's not just the apples aren't just the rates. It's
Right.
It's the apples.
It's
are
everything.
Everything involved.
And then
so.
if that's all good, you're left with, again, this is just for somebody that you don't know. Are they in the right program? Are they in the right program? Is there an option that would have been better for them? That's the job of a loan officer is to run through all of that.
Yep.
And give people options. Hey, you could do this and this. At a 620 credit score, you can do a conventional loan. I've never done one because the rate is so high on a conventional loan at 620 versus FHA. It almost makes sense. What do people care about? Payment. At the end of the day, they care about the payment. FHA is a lot more forgiving on a 620 credit score. Anyway. All right. That's 30 minutes. Wow. Okay.
Boom. So
Yep.
real quick.
Yeah.
I always get confused, for
Me
like doing it easily.
I wasn't going to say
For
that.
inspections and that kind of stuff, as far as what is required for VA, FHA, conventional, blah, blah, blah,
Mhm.
for like, a bacteria test, termites. Yeah, cover that real quickly. Just a reminder before you close up.
Yeah. go ahead.
Depends.
It actually doesn't depend a whole lot. Anything on a well requires a water test.
No matter what type of loan. If it's
Not,
conventional?
well, let's start with government. And we have a flyer for this. Actually, let me pull it up.
Yeah, it's missing out of my door.
I know what happened. I gave it to you.
I know it's missing. Yeah, I probably have it in an email, but I had printed it off and I had taped it to one of the inside of the door.
Somebody said, oh, that's good information. Let me take that.
Yeah, somebody sold it.
Exactly.
So, safe water, let's just go with the
Like
safe water.
somebody's
drinking
getting their government or their student loan paid off.
gas. You brought it up again.
No.
A lot of times people get confused with the well inspection and we don't need well inspection. It's the water test. Some people call it a
Right.
well test because the
Equal
water's
amount.
coming out of the well. So FHA, VA, and USDA, which are all the government loans, you always need that. You don't need it on conventional. Unless you need a lot less on, you don't need anything on a conventional unless the appraisal notes it. Like, I guess, like if, like the appraiser noticed the septic field, like the effluent is the right way to say it, was like leaching, and coming out, and you can smell it and all that, you know, the appraiser will note that. I mean, that the appraisers are eyes and ears of the property, because that's the collateral for the loan. Termites are always needed on, just remember government, you need a water test and you need termites.
Always.
Would just, yeah, with pest inspection. I just had something in my head now that it's left me. Will that help?
Maybe it won't go over your head.
Almost everything goes over my head. Home inspection, home inspections. Never, ever needed.
Required.
No, I mean,
Right.
we have a document that actually states that we recommend it, but
Mhm.
it's, you know, it's, I had an agent call me last week and thought that, and that's okay, this is what we're here. You know, we love, that's why we do these weekly, and then, you know, calls during the week.
Even on government back.
Never, no, we don't. No, home inspection is up to the bar. We recommend them. and We have a document that says we recommend them, but it's not required and we don't want to see it.
FHA has a document too.
Yeah. So, I had an agent say, oh my God, I thought they were required.
Yeah,
No.
I'm just saying that too. I'm like, what?
Yeah. Also too, some things change. Recently, 2 months ago, on a VA loan, it used to be the seller could pay for the termite. Now the buyer can pay for the termite, and you can also charge the realtor admin fee, $3.99 or $3.50 or $4.25, whatever your company charges. That could be the veteran can now pay that.
So is there anything required for a conventional?
Unless the appraiser notes something.
Hold on.
Yeah, something call it out.
Okay.
I mean, believe it or not, I mean, I think this is crazy. But I had a conventional loan years ago where the septic failed. We could have closed the loan. I mean, I don't agree with that.
Yeah, that's not, yeah.
I mean, because it was 30,000 to fix. What if the person doesn't have 30,000? But that's crazy. That's the guideline. You know, we don't require reports, so we don't know whether it's the appraiser didn't note it, you know, so. Yeah, I mean, obviously we didn't close because the buyer's agent wanted to do the right thing and make sure that the seller was going to fix it, and they did. But the heirs of the seller.
Good information.
Thank you.
Always best to call.
Yep.
Yep.
You know, we do these, they're posted. We thank anybody who's going to watch this later. Always good to call.
What are rates?
It's
Whatever you want.
And yeah.
You
whatever
tell me
you
the
want.
rate you
Still
want.
going down?
You tell me the rate
You
you
can
want,
buy
and I'll tell you
I
the
can buy
points.
it, yeah.
I'll tell you the
Buy it.
points it's going to cost.
Yeah, we can always get you to any rate that you desire. It all depends on how much it's
Only
gonna
costs
cost.
money.
That's right.
Good stuff.
Okay,
Thanks, gentlemen. Again.
thank you.
Yep. Good one.